In today's conversation, I want to explain to you how to get up to $150,000 in business funding in very simple steps. And I want to share with you the freshest, the latest hacks that you really want to really follow if you're trying to get business funding real fast. See, the whole thing is a lot of entrepreneurs, a lot of small business owners, they need business funding, but they have no idea how to really go about it. So in today's conversation, I want to attempt to really explain to you very simply the steps you need to take to actually get the business funding that you need. Okay, so here are the steps. The very first thing you want to do here is to have a clear idea. What kind of loan that you need? You need to have a clear idea, because see, the thing is, when you talk about business funding, you have all kinds of business loans, business lines of credit, you have equipment finance, and you have all kinds of loans that actually can come up. As a matter of fact, if you're talking about business funding, you can actually even get business funding from a Net 30 account. Okay, so you have to be really clear about the type of funding that you really need for your business at this very time. See, the whole thing is that maybe you want a certain type of business financing, but there is another category of business financing you could qualify for, maybe because of your business profile, because business is booming or not booming, or maybe because of your business credit or your personal credit score too. So those are really important elements to really pay attention to. Let me give you an example. If you want to finance a large purchase or a business expansion, traditional term loans are great for you. You can even try SBA loans, okay? Now, if you need to fund, let's say, day-to-day expenses, then a business line of credit is actually great because it is flexible enough for you to actually get the credit you need without really committing too much of your collateral. If you are looking to fund a startup, then you might want to think about a combo. Like maybe you want to get a business loan here, you want to combine that with business credit cards, or you want to try maybe personal loans too. There are personal business loans. In other words, you get a personal loan that you can use for business purposes. For example, Discover actually doesn't have business loans, but they have personal loans that you can actually get to fund business purchases. The same thing is true for PenFed. PenFed doesn't have business loans, but they have personal loans. So the whole thing is that the first thing you need to do is you need to decide what type of loan you need to fund your business. This is so crucial. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. The next thing you want to really think about if you're trying to get business funding up to $150,000 is to really determine if you qualify to get a business loan. See, the whole thing is, right now I'm talking to you, you probably have a business, or either the business is established or the business is new, but the question is, do you qualify? So you want a business loan, you want a business line of credit, you want a business, let's say you want a Net 30 account, but do you qualify? And see, when we talk about qualification, this question actually covers several items. For example, when I say, do you qualify, I could talk about your business credit score. When I say, do you qualify, I could talk about your personal credit score. If I say, do you qualify, I could talk about your company's financial situation. If I say, do you qualify, I could talk about your cash inflows versus cash outflows. If I say, do you qualify, I could talk about the specific lender that you want to apply with. Okay. See, the whole thing is lenders have different types of requirements, and the thing is that eligibility criteria they really differ based on lenders. Let me give you an example. If you were to go to a credit union versus a traditional lender, or versus a traditional bank, or versus an online lender and alternative lender, the criteria are totally different. Okay. Obviously, we know from experience that alternative lenders, they actually are they're more flexible, but they charge a lot more when it comes to APR, and they charge a lot more when it comes to fees. So you'll probably get the cash you need, but you'll be paying a lot for it. So it's all a matter of what's important for you. Do you care about the cash? Do you want the cash inflows to be able to finance your next project, or do you really care about the APR too, the cost of funding? So those are really important elements to think about. So you need to determine if you qualify to get a business loan, because again, now maybe when we talk about business funding, a business loan is only one part of the equation. You can get a Net 30 account. So if you can't get a loan, you can get a Net 30 account from a vendor, and maybe with a 25 grand or 50 grand credit line. Now, when they start you, they're not giving you that much. They'll probably start you around 10 grand or 5 grand in some cases. And then as you gradually build credit, as you gradually sort of establish a rapport, establish a history with the Net 30 account, they will gradually raise your limit. Boss, I want to quickly remind you of today's topic. We are having a conversation about how to get up to $150,000 in business funding in a few steps. If you were to go to a credit union, you will not really reach the same sort of report than if you were to go to a traditional bank, and the same is true if you were to go to a regional bank or even a local bank for that matter. I'm not even talking about the online lenders. I mean, online lenders such as Balboa Capital, for instance, or even fintech lenders such as Bluevine. Okay, and so or Fundbox for that matter. So it's one of those things where you have to sit down and you have to actually run. Like, you need to have a list of the different categories of lenders and see which one is more amenable to businesses like you based on your profile. See, everything starts with your profile because, again, as I said earlier, you have to think about what really matters to you. Are you trying to establish your relationship? Are you trying to just get the funds and just start funding your next project? Not even caring about the APR you're paying. Do you care about maybe talking to a lender first before actually getting the funds? If you care about relationship, then you really want to start right off the bat thinking about that relationship. So when I'm talking about comparing small business lenders, I'm not just talking about the cost of borrowing here. I'm talking about also the style, okay, quote unquote, the style, the customer service, the process, the eligibility criteria. How long does it take to receive the funds? Those are elements that you really need to pay attention to. If your goal is to get funding up to $150,000, get funded real fast, you need to actually be able to compare and contrast those small business lenders. And the question here is that, before I close on this section, which type of financing do you need? Because see, when you compare and contrast business lenders, you are comparing them based on a certain category of funding program. So what's important to you? What's important for you right now? Okay, is it the speed of do you want to receive the cash real fast, or do you care more about the support before and after funding? The next thing you want to do here is if you're trying to get up to $150,000 in business funding, it's really important to gather your application materials. See, the whole thing is, at that level of funding, you probably have a lot of stuff already that you need to provide in terms of not collateral, but paperwork. See, the thing is that the paperwork is not really about you trying to secure the loan. It's about you providing evidence that you are going to use the cash properly. See, the whole thing here is that you have all kinds of regulations that are currently here to sort of protect business owners, but also protect the country in terms of money laundering, for instance. That's why a lot of banks, a lot of lenders, they have something called KYC, know your customer. So those are procedures that are meant to actually provide more information to the lender, but also to authorities to make sure that you are legit. So basically, if you are trying to really get up to $150,000 in business funding, you want to actually provide information about your business. That's for sure. You got to really provide also financial statements. So we're talking about financial statements for you, but also financial statements about your business. See, the whole thing is when you are applying simultaneously for business funding, you are providing not only information about the business, the viability of the business, but also your own viability, your own financial viability. Okay, so you also need to provide some details about the business owners. So not only about you, but about if you have partners. This sort of goes back to what I said earlier about anti-money laundering, AML. So you want to provide evidence that, hey, listen, you are quote unquote a law-abiding citizen. Okay, and in some cases, if you have to get up to $150,000 in business funding, you might have to provide collateral. You might have to provide a personal guarantee. Now, a lot of business owners do not want to have that, but that's true. We really understand that. But in some cases, for you to actually speed up the whole process, you might have to provide a PG. It's really important to understand that when you provide a PG, it's not the end of the world. It's just an extra incentive to make sure that you pay the loan real fast, okay? And that's really important because if you want to establish the relationship I was talking about earlier with that lender, you want to repay the loan real fast so you can get another loan. That's how you establish a relationship over the long run, and you have to do this if you want to get more. If you want to get funded more and more in the future. Plus, I want to quickly remind you of today's topic. We are having a conversation about how to get up to $150,000 in business funding. One thing you want to do here is that you want to really start applying for the kind of business funding that you want. Okay. The job here is that if you're trying to get a high level of business funding for your business, again, sustainably, you want to apply. You see, you could do all the research, you could do all the preparation, but if you do not apply, you would have wasted time. See, now when we talk about applying for a business loan or a business line of credit or a business like a business equipment financing arrangement or anything of that nature, or even a net 30 account, you definitely have to think about what really preserves your FICO score, but also preserve your business credit score. That's why we always, really push for a soft pull. So if you're trying to apply for a business loan or business line of credit, you want to go for those soft pulls first. So you want to go, and you have a lot of lenders who are basically offering you a soft pull approach. Normally, if you go online, like online lenders, for instance, or if you have fintech lenders, they usually have this process whereby they do a soft pull first. So you constantly and automatically want to go with the soft pull. So when you actually have a soft pull process, you are preserving your FICO score. So once you go through the soft pull, now the soft pull is kind of cool because it gives you options. It gives you an idea of what you could qualify for before you apply for real. Because see, the thing is, once you apply for real, you actually kick off a whole category, let's say a whole list of processes that will affect not only your FICO score but also your business credit score, because you will have something called inquiries, right? Inquiries on your FICO score, but also on your FICO history, but also inquiries on your Dun & Bradstreet, on your Equifax business credit score, credit history, but also on your Experian business credit history. So that's important. Okay. So when we talk about applying for the business loan, you remember that you could always apply at a branch as well. If you go to a traditional bank, you can always go to a branch. You can also apply for this business loan. You can apply for the business loan over the phone. So you have all kinds of possibilities. You have to see the lender that you are going to apply, you're going to apply at, and the best way to reach them. Let me give you a bonus here. And the thing here is that if you want to get up to $150,000 in business funding, it's really important to actually read the loan agreement. See, the whole thing is a lot of entrepreneurs, they're really they're gung-ho, they're really happy. Once they get the funds, they're really happy and they think about what to do with the cash, right? But it's one of those things where you want to take the time, you want to take really the time to read the loan agreement and see exactly what's really important for you. Because see, buried in this loan agreements can be a lot of stuff that either work for your firm or don't work for your firm. It's one of those things where, the fine prints are kind of quintessential in terms of seeing, like, especially if you have like a 5-year loan, you really need to see the fine print so you know what really will govern this loan agreement over 5 years. And 60 months, that's a long time. So you have to be in a situation where you are basically, see, the whole thing is you want to read, you want to understand everything. And if you do not understand everything, it's just better to actually ask the lender. You better do the preparation now. You better do the questioning now than being sorry and frustrated and surprised later on. Because when comes time to enforcing the provisions of the loan agreement, you'll be really sorry if you tell a court of law, hey, listen, I did not understand my business loan agreement. No, if you don't understand something, you ask. If you still don't understand, you hire a lawyer. If you're getting up to $150,000 in business funding, I mean, you could hire a lawyer and pay him or her $500. It's worth it. It's worth it. It's a good investment. Okay. And the thing is that you also need to think about how to get the funds. Do you want wire transfer, or do you want, like if you have a business line of credit, if you are approved for a business line of credit, how do you want to draw all the funds at once? Or do you want to open an account with the bank where you got your business line of credit, and do you want to draw like maybe periodically, like every month or every week? So you have to think about how to actually it's called the use of loan proceeds. How are you going to use the loan proceeds? How are you going to use the business line of credit proceeds? You have to think about that. This is part of your liquidity strategy. Before I close to this conversation, let me give you a few pro tips. if your goal is to get up to $150,000 in business funding, it's important for you to actually you have to plan, right? So don't wait don't wait for you to have the needs, like to start having cash problems, to start thinking about business funding. This has to be a strategy that you have to start when times are good, not when times are bad. In other words, you have to think strategically about how to get the funds and how to use the funds. Okay, it's a lot easier when times are good, when everything is flowing properly, when you're having revenue coming in, than to actually wait when you're actually having problems. Okay, and it's one of those things where you have to sit down and really see your cash inflows and cash outflows and see exactly what kind of needs you have. It's called a cash flow analysis. In other words, you look at what comes in, what goes out, what you have in terms of excess or deficit, and what you need to actually get your goals achieved. And it's one of those things where you may not have to do it by yourself. You may have to actually brainstorm with your team to have a clear idea where you're going in terms of liquidity. Now, it's one of those things also that where you have to start building relationship. See, the thing is that relationships are kind of vital here, because a lot of people talk about business funding as just a transactional history. No, business funding is actually an emotional history. It is actually a personal history. You build relationships with people first, and those people in turn can actually enable you to get the business funding that you need. Of course, yes, you have a quantitative aspect here. You have a financial aspect. You have a monetary aspect. So money also plays an important role. Your business credit plays an important role. But first and foremost, everything starts with a relationship. If you want to get a net 30 account with a vendor, you really want to start building a relationship with the salespeople there. You want to build a relationship with the account managers there, so they know you, they know your business, they know why you need the funds, they know why you need the inventory, and they will actually work with you. You start building a relationship first. That's the first thing. The second thing is you want to start early. If you know that you are going to need maybe $150,000 in business funding 6 months from now or 1 year from now, you better start now. You better start now, because it takes time. Okay. And the thing is that maybe if you are trying to get like $150,000, it's more important to get, let's say, a 25 grand now, 25 grand later on. Sometimes it's just great. It's just better to have what we call a small strategy than to actually trying to go big at once. Because when you're trying to go big at once, if the market ain't there for you, if the conditions aren't there for you, you will be frustrated. So it's a lot better to actually go for smaller sort of funding processes, smaller funding programs, and get those before going for the big enchilada. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about how to get up to $150,000 in business credit. And I give you the steps, and I give you a bonus, and I give you a few pro tips. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.